Yeah, so I sent some pictures. You started at this morning with the price point, and I'm like, yeah, I got a 14% gain. So I've showed you this one right here. I'm actually waiting. Let's see if you can, yeah, you can see touches. So I'm waiting for price to break this area here. So this is the area that I'm looking at. All this right here, this whole area. That is an area based upon the daily and everything like that. It's a nice little zone that price can get into and possibly bounce away from. This is what I'm talking about, like the 4840 area. It's this area right there. So I sent that earlier this morning. And then we come down a little bit further, and you're talking about you just don't see a sharp drop, not impossible, but nothing that indicates that. And I'm like, well, I don't know. I'm looking here, and this is where when you look into stuff like this on the daily time frame, you have that 4837 area, which is, it's just a high price point, and then this 4839 area. Both times that price has been here in the past, you've had some sort of bounce away from this area. And this is the third time that we are in this area as of yet. And so it is likely that we could see some sort of reaction from this. What does that reaction look like? I have no idea, but it's possible to see a reaction. What I would like to see is price just smash through it. And so here's the other picture. So those are those areas way back there in the past. Looks like last year around June and I don't know, September time frame, whatever, August time frame is when the last time we've been here. You have two different ways to look at this. You have, so keep that in the back of your mind, that back on the time frames back 2022 that we had some bounces from here. We zoom in now. I think this is the weekly, just because it is the weekly. So this is what the weekly candle looks like. This first weekly candle had that initial reaction off of that zone. We see that now. Cool, great. This next weekly candle, we have like 3 days left before this candle closes. And it's a strong candle. So that's a good sign that price is likely to continue up. However, if you look at every other weekly candle, look at all the weekly candles, and what do you notice in regards to how they close? Do they close a solid rectangle, or do they usually have these little tails on the top, which we call wicks? Wicks on the top, wicks on the bottom, doesn't matter. They're just called wicks. And they generally have a wick. And so the idea that price is going to close strong bearish without leaving a wick, the probability of that happening is not high. You get one right there. But out of all the rest of them, you'll generally notice you have wicks. And so all that is on the lower time frame is price pulling back. And so those are the pullbacks that we generally look for, because if price is going to continue going, then it's going to pull back a little bit and then go. So this is where I'm saying I want to see how this closes in this zone. If it closes strong, closes with a little wick, that gives me a little more confidence that price is going to break this level, because it's not acting like it has in the past. So that's good. That's good for us. Now, once we get to that, I think that was the last image I sent you. Yeah, okay, so we've just talked a lot. Okay, once we get to that point, what I'm basically waiting on, and so here we are, that weekly level, here it is broken down all the way into like the 4-hour chart. So all these, however many 4-hour segments are in a week, I don't know how many, there's what, 6 in a day, and times 7, so 42 candles in a week. Probably not, because it's only 5 days. I don't know. But either way, there's that. You just break down to a granular level so you can see a little bit more as far as what price action is doing. And so I would love for this to push up higher, and I think it's going to push up higher. You already said we're in the 48 area. I do think at 48.40 we are going to see some sort of reaction, a pullback. What does that pullback look like? On the 4-hour time frame, you can pull back anywhere into like this area right here, because you've had a bounce there, and then price did all this wonderful stuff, came back in and bounced there again. So that would be an area that once price comes up this area, it can come back down and bounce again before continuing up for next week to continue bullish and break this level and stay above this level. So that's the $44 area. And so it's like, that's a good area to get back in. If price dips back down again and wants to maintain this uptrend structure. So this entire uptrend structure, the way that a market moves is it creates highs and then a low and then a higher high and then a higher low and then a higher high, higher low. That's an uptrend. And you actually have that right here. You have a high, then a higher low, then a higher high, then a higher low, and now we've created a higher high. Pulling back into here would still be a higher low, and by all technicality, you have two different areas depending on how you look at the market. You have this area here, which is the 43 mark, which is the low there, but also you have this $40 area mark that you could look at as possible. If it's going to maintain this uptrend, it shouldn't violate this area at the most. Technically, I would say the 43, this area right here, it shouldn't violate that, just the way I see it on the 4 hour. But if you were to get out to like the 8 hour, you could, this right here on the 8 hour just might look like one solid move, in which case this down here is that low that was created that created this high. So this should not be violated. But with all that being said, this area right here is that major daily area. I'm not sure I still have any sort of charts that show the daily area. We've talked about it before. We've talked about it before in here in regards to this, by the two technical points of interest. This is that level right there. You had two bounces off this level over here, and then we have not touched it until we completely broke above it now. But it's acting as support right there. And so it can continue acting as support for moves up afterwards. So it could come all the way down to the $38 mark before finding support and taking back off. And so there are a lot of different areas of interest that would be great to get in at, understanding it could possibly go a little bit lower. My final cutoff point, though, if I were to be like investing and wanted to my risk structure would all be based upon being below this level here, though. So I wish it would stop moving, and I just want to touch it. Would be below this area here. So like the $36 mark. If price got below there, I would probably dip out and be like, let me just, whatever I decided to risk, whether it was like 300, 400, 600 bucks, let me cut my losses early, whatever that is, or cut my losses and just wait for price to really come down here to this, what is that, the $28 mark? Because that's the next zone that if price is going to bounce, it's going to visit before it starts bouncing, and then you can get in there. So all of these, it's all speculation. If price gets to those zones, it's not like you just immediately, oh, well, let me go ahead and buy because this is the zone. There are price patterns. There are key elements on the chart that you can look at, and it leads to a higher probability that it'll bounce up from that area. And I think I spoke most of it in here in regards to, no, I didn't. But you see like these wicks that are right there in that zone, that's a good indication price is not being able to go lower. It's an imaginary, it's not really an imaginary battle, but it is a battle between buyers and sellers. And so every candle paints a story. And if you just read the story, you can find out who's going to be, or who should, higher probability, be victorious in the end. It's like a boxing match. Just because everybody has good fights here and there doesn't mean you can't get a good lucky one in. And so consider it a boxing match, and sometimes you can pretty much project what the outcome is going to be. And that's really all it is. So there is that. Sorry, none of this is actually coming through. It's like, man, I did wonderful stuff on sharing these highlights and insights and all this other, anyway, whatever. It's fine. But yeah, I am up 14% by all technicality. If I had gotten in when I planned on getting in, which is down here at this pink zone here, then I would technically be up, I think, 20%. But I was impatient. I wanted to figure out how it was going to work for Solana and through Coinbase, and just putting in $10 and would it be leveraged and how all that other stuff. It's not leveraged. It's a 1-for-1. So really your gains are going to come from extra capital. The more money you put into it, the more you'll be able to actually get back. Unless you want to move away from that and go to something that is leveraged. Leveraging just gives you more buying power, but you can still maintain the same amount of risk. All it is, though, is you have the ability to compound faster on the smaller moves. So this move right here that we were in and are still currently in, instead of it being a simple, so like this was a 14% gain on $10 because that's what was in my account. But if I was leveraged, this would have been a $10 position size. This entire thing, why do you hate me? This entire thing right here, this entry here would have been my entry, and if it came all the way down here, I would have lost $10. It's no different than what I just did right now. I put in $10. It's possible that price can drop all the way down. You lose 100% of whatever my initial value is. So it's still possible for me to lose it. The idea being, though, it would have to fall a whole lot for me to lose that $10. Whereas on a leveraged account, I've already stipulated that once price gets here, I'm out on $10. So if this was a leveraged account, I would have got in here and price would have gone up here and I would have immediately made $10, which is 100% of my initial invest or my initial risk. And so this is where leveraged accounts can get you to make more money without necessarily risking any more than you already intended. I intended on risking $10. It's just a matter of how is that $10 going to be compounded in whatever way, but it's still the initial risk of $10. Granted, there's always an element of risk that's a little bit farther. You know, if Solana completely and totally tanked, there's a possibility that my broker wouldn't be able to get me out in time, and it would end up being, $40, $30, $10, $20, $12, risk instead. There's always that possibility, but it's less likely to happen than what's that. So that's one of the benefits of leveraging, but that would take a little bit more active trade management, not necessarily to the point that you're talking about in regards to every 15 minutes. Like, I'm only looking at Solana usually on the 4-hour chart to see, hey, where's I have my alerts set, but every now and then I'll dip back in, especially in Coinbase, and be like, what does that actually look like? And I'm slowly starting to get it that it's really just a 1-for-1. I'm not going to be making, I initially put this position and I'm like, okay, cool. If this position hits, I should hit $10 as far as my gains. And it's not. I might be able to hit 10%. Well, I'm actually at 14%, so I can hit that. But it's 40% of the actual move, not necessarily what I invested or what I risked. So that's the downside on that one. Now, with that being said, what do I see price doing? I see price bouncing from here. I see price dipping down from this point only because in the past it's happened before. Now, what's that pullback look like? It's going to be relatively small. Do I think it could possibly hit that $43 mark? Yes, you've already seen where I tried to point it out earlier. It could definitely hit that $43 mark. That's actually a zone that I would look at to possibly get back in, which is where I'm saying you have the $600 in there and you're using your $43 mark to be like, this is when I'll get out. And unfortunately, that would be the time to be like, no, this is a great time to buy. It's at a low, and if price starts, it starts moving up or looking like it's going to bounce up, that would be the time that I would actually look at you and go, hey, if you have any extra money, this would be a time to go ahead and get in. And you're looking to get out on that. Now, granted, you're looking for a short-term burst, which I hope happens. I really do hope that when price gets up to this level, where are we at? When price gets up to this level, that investors, buyers, everything like that is like, I want to see this break. And when it actually breaks, you can have what you call breakout traders. That's their trading strategy. They wait for price to break particular levels it hasn't broken before, and that's when they take their entry, and that's when they buy. And that surge of influx of traders, whether it's day traders, retail traders, hedge funds traders, because everybody out there uses different trading styles depending on the market. And so this is what you're going up against, is you're going up against everybody who has all these different trading styles. And so sometimes you've got to find out how to follow what is getting ready to happen. And so a breakout works, but the idea that price is going to break out all the way up to the $70 mark, $78 mark, I highly doubt it. Could it happen? For sure. But with the way price has been trickling up right now without any real surge, and we haven't had any like news to really propel that, I see it just breaking up a little bit high to about that area, about halfway in between, before you have these investors, these people who have bought in on these breakout, and they're like, okay, it's broken out and it's shooting up good. I'm up, $140, $170, $1,000, whatever they put in. Their mentality is going to set and go, okay, I need to pull out now because I've gotten all this money. I don't want to lose it all. And that pullout is what helps create that pullback. People start pulling out. The other people who trade overextended markets look at this and go, okay, yeah, it's gone up all this way here. This to me is overextended. It's got to start pulling back. Where's it going to pull back from? Well, I can get in. I start seeing price doing whatever it's going to do. It triggers them for whatever strategy that they're working with. They start getting in. They start selling basically Solana in a way that basically it's the alternate, because it's Solana versus USD, at least in this chart. So they're basically taking the broker's backing, saying, hey, I am betting you Solana's going to go down. And the broker is taking that with the flip side of somebody else on some other part of the world that is looking at the market and going, no, I think it's still going to pulse up all the way to $70. And they basically pit them together. And it's like, well, if you lose, you end up paying this guy what you're risking. And it might be a group of people or whatnot just to cover whatever the price is. But this is how the market moves. It moves in waves. It has spikes from time to time, but generally you have a whole lot of waves. And we just ride these waves. Some people make profit on the way up. Some people make profit on the way down. And we're exchanging money all over the place, and somehow it works. I don't care how it works. It's just a matter of you just need to make it work. If you end up robbing from Paul just because he's a gambler and wants to throw in money, so be it. Take his money. So I see that happening. If we can hold above this price, or if we can get to this price, I want to see the breakout traders jump in, shoot the price up, get up to about the $60 mark-ish, $55, $60, before price starts going sideways. That would be an area that once price starts going sideways, you have two options. You can either sell there, you can close part of your position, hold some just in case, because as price goes sideways, there's no guarantee of which move it's going to take. You could fall back down, it could rise back up. You don't know. But it's a hesitation in the market that lets you know the market doesn't even know what it wants to do. Now it's up to really everybody else in the world looking at Solana going, what do I think is going to happen? And based upon what they think is going to happen, they'll place trades upon that. The winning decision on that is what actually makes the market happen, makes the market move. And so then I would like it to come back down to about the 48.40 mark, that area there. And that would be a beautiful area to buy back in once price starts trickling up. And you just play this over and over and over again. So, and this is how you'd be able to get those 40 extra bucks out of the 600 you're already going to put in there. Instead of it just sitting there doing nothing, you can manage it this way. So, will it break up above this area? I don't know. I'm waiting to see what kind of stop we're going to get in this area here around the 48.40 mark. I don't even know what it's at right now. It's at 47.65. If you get a chance, go to the advanced trade section and then go to your Solana. Because there, yeah, okay, that's fine. You can actually see charts. You can see candles, and it's not a line chart. A line chart's not bad, but to see how the market's actually fluctuating in regards to how it's fluctuated in the past before, the candle charts are better for it. You don't see that on the line chart. The line chart is just a line. So you can't see, you see movements, but you don't see, like, what time frame is this? This is the 6 hour time frame. You don't see what every 6 hours possibly looks like. As far as, why can't I get this? I want you to come back down. There we go. You can't see how every 6 hours what the candles actually look like. Or every, yeah, you can't see what that look like. So there we're at right now. And if you look at it, like we're breaking the high of this November time frame. Now we're up here. I really do see, price. I see price just pulling back. See, there's our levels that I'm talking about before. Last time we were in this level, we bounced away from here. The next level after that is this $60 mark, which I didn't even notice until now. This is the next time price bounced up this area, came to a particular spot and bounced back down, is that 60 area mark. So that would line up perfectly with my analysis in regards to if we get this breakout trade, where is it going to go? Well, breakout traders, it's not like they're shooting for the moon. They are looking for a particular point where they think their trade is going to hit some traffic. Now, whether or not that is the self-fulfilling prophecy or not, they're looking at the chart in the past and going, where am I going to likely hit traffic? Well, where are you going to hit traffic at? Somewhere around the $60 mark, the $59 mark. So they're going to anticipate traffic there, and they're going to pull out of their trade. Now, what does that do? Well, that starts that pullback maneuver, that pullback session. Once again, self-fulfilling prophecy. Oh no, price is going to stall here and possibly bounce. And then everybody pulls back, and guess what? It stalls and possibly bounces. So this is where historical data can help you predict, which I hate the word predict, future events, because it's not like we're just predicting what future events are. There are also key elements logically, rationally, that you can look at to see and make sure it aligns with past events. So it does, you are trying to speculate what's going to happen, but then you're actually using current data, current rationale and logic to help give you a higher probability that what happened in the past is happening now. And so there is, man, I didn't even realize that was there. So yeah, so that would be a beautiful area. I would love for price to break out. It would probably get to this area. You'd probably see some stall, and it would probably fall back down. And then do the exact same thing. It would come down a little bit further to where the previous support was, probably once again right around this area again. Find that and then bounce away, and then we'd move up to the $70 mark, which is the next area for whatever reason. I don't remember where that is on the chart. I don't know why I had the 70 area. I'd have to look. This is a harder chart. That's the $76 area. Yeah, so it might be somewhere in here where you're going to see some reaction. So that's all it is. I'm enjoying watching Solana. It's been a lot of fun. But it's no different than what I'm actively doing. It's just I get to explain it to somebody in regards to what I see happening, and then when it happens, I feel a little bit better about myself because I know you get that what is it, imposter syndrome? You get that imposter syndrome that you don't know what you're talking about, and you feel that, but then there are key moments where you build your confidence back up because you realize you do know what you're talking about, and explaining it to you and seeing how things play out has been like, see, I you may not look at it and go, yeah, he knows what he's talking about. I know what I'm talking about because price is playing out pretty much on par to what I'm expecting when I expect it. Now, granted, price may do something weird and I didn't expect it, which is okay because it wasn't necessarily part of my trading plan. If it didn't play out the way I expected it, I wouldn't trade it. And so I'd leave it until it started doing something I did expect. And then I would get into a trade that way. So it's okay that, not all of my analysis 100% lines up. My analysis only needs to line up about 80% of the time, enough for me to take a trade with confidence that it's going to play out in the way that I want it to. And if not, I can still manage it in a way that I lose less than intended. And if I lose less than I usually win. And so this is how I maintain my profitability. So that's how, yeah, that's pretty much how all that plays out. Actually, I need to get into this EuroCAD trade again because we pushed in deeper. Okay, so that, yeah, let me ignore you on that one. Okay, so I'm going to stop this now. I'm going to load it up to YouTube, and then hopefully you're able to watch it at some point in time. Sorry for being 20 freaking 5 minutes long.